Hello everybody, this is Denmark. Just want to give you another update. Today we're not looking at too much news events as far as any type of like red folders happening. We have the ISM manufacturing PMI at 10 a.m., but I'm not too concerned about volatility regarding that. We're still paying attention to tomorrow's NFP, which is still on our radar, so we got to look for the setups leading up to that. So here's where we're at. Yesterday I was talking about this particular setup happening, looking at this for the impulse down A, B, C, and then we're looking for this particular short to the downside, but I was also letting you know that this could end up being a flag for the upside.
So in order,
Let's move a little forward, skip.
I'm looking for some sort of correction down.
So I'm looking for, well, before I go to the flag, but yeah, this is what I'm looking for as far as the move to the downside. If we get another, like a slow correction, a slow sideways correction, hopefully we'll catch this short. We're not necessarily getting that slow sideways. We're getting some price action that's actually sharp to the upside, so that's making me come to the starting to think that it's this next possibility, which will be the flag. This flag, you see this flag that I'm about to create here? This flag. See, we're starting to potentially get this sharper impulse to the upside. So let me show you what I mean by that. Let's take this, close this. Also, let's bring up the RSI. Scrolling this down a little bit. So we're not done yet, and it looks like we're making a flag. So, assuming that this is, let's change the color here. I don't want aqua, I want, I don't know, purple. This seems to look good on top of the black. So if this is the impulse and we get in our like A, potentially B, if we get another move down for like a C and this is not sharp, I'm looking for this potentially to still be that flag to the upside. Because if that news event comes out tomorrow and say if it's positive for the USD, this is definitely a possible setup. And then, you know, like I was saying earlier, we will deal with whatever information we get once it comes to the top here. But we got to look out for all these different possibilities. So we got to keep in mind that if, assuming that this does continue to correct sideways and it stays corrective and we don't get those sharp impulses to the upside, then this sell is still valid, but we'll see what happens. So you got to really pay attention to this one, because this, and of course this could get a little more complex. It really depends on how it ends up forming. You got to pay attention to the patterns, you know. You got to pay attention to the price action, because initially we're all basing it off of this impulse. This is still the most valid, the most recent impulse. We never broke this top, so you never came up and broke this top. So this is what I'm paying attention to. See, and after that, we're not necessarily getting any sharp impulses to the downside. Like you see that this sharp move up, and now we're getting on the smaller sharp move up, and we're getting corrections down. We're getting corrections. We get, oh, these are a little bit sharp, but these aren't sharp enough for me. This is just sharp within this impulse, so this is still a valid correction here. That's why I still think that this could come up. But once we get up here, if we see that sharp move down that's similar to size of this impulse, then we'll know bingo that this is definitely coming down. So you got to pay attention to the candles. It's a lot. It's more than just indicators. It's more than just patterns. It's more than signals and all that other support and resistance garbage that everybody's spoon-fed. You got to pay attention to the many different layers, and right now I'm paying attention to this sharp impulse to the downside. Okay, because I mean ultimately, and I talked about this in a previous video, the first one. If we I don't see it related or anything, but the first video I posted, I was talking about, here's even the thumbnail, you can see it. I'm looking for that move to the downside. Let's see if I can pull this right here. I'm looking for this move. That's my roadmap, so I'm kind of anticipating for that to happen. So we're playing with the top. If you're in looking for trades here and you're looking to catch all these small moves, I don't advise that, because this is still the hourly. I'm looking at, if you pay attention here, I'm looking for these larger moves. So I really don't care about the tiny movements. I don't care about catching 30, 40 pips up here. I'm looking for the large 1,000 pip move. You know what I'm talking about? So hopefully you have your risk set. Hopefully you have a sense of risk management in play, because I mean, if you're properly doing this, let's just assume it doesn't. Let's say you got at the worst entry. Let's say you got down here. Your risk, well, it has to be set like right above the top of the impulse. And if my target's somewhere down here, let's just be safe. Let's just do a 1 to 2 type of ratio. Let's not get too adverse. You need to calculate what this is. For example, say if this is your entry from, let's take a screenshot here. Let's assume you did have that really shit entry, and this is your stop loss. I would hope you have calculated from here to here to only be 1% of your account, okay? So say if this is however many pips, I'm gonna guess 200 or something. You need to go to the calculator and type in, say if you have a $1,000 account, you need to go to that calculator. You need to plug in 200 pips, and you only want to risk 1% of your account. It's gonna tell you you can only trade how much of a size. Let's do that in front of you, because I feel like this is something that's very important that a lot of people are just skipping. So if I go to let's go to risk forex calculator. Let me just type this in. You probably can't see it. Yeah, I like the MyFX book one, me personally. So say for example you have a baby. I don't recommend going live unless you have at least a $10,000 account. That's that's a small account. Truly, you'd want a $100,000 account. But I'm going to be realistic for everyone who's following along. Let's say you have a $1,000 account, and I don't recommend this. This is not enough money to be trading live. I think it's silly. Okay, so $1,000 account, risk ratio, you want to do 1% per trade. Stop loss, let's go back. Let's say this is our stop loss. I'm going to take out my calculator. You see this tool on the left here? This is like a little ruler thing. I'm going to go for my entry, my terrible entry. I'm going to go to the top of this impulse where I think that if it hits, it's invalid. Okay, so it's close. It was 100 and let's just say 180 pips. But for simplicity, let's say it was a 200 pip stop loss. This is on the EurUsd. I'm going to calculate. So I can't even make the smallest size trade. It's a 0.005, so it's impossible for me to make this trade. So I would have to have a much larger account, or I need to risk more of my accounts. Let's say 5% of our account. Okay, we can do a 0.002 trade. So now we can do a 0.002 trade from our shit entry, this being our stop loss. And we know that if we lose and we're wrong, and say for example this comes up and this takes us out, I know that that was only 5% of my account, and I'm not crying about it, because 5% of your account on a $1,000 account is just simply $50. Okay, now me personally, I'm only risking say 10% of my account at one particular time. So if I lose 2 trades in this particular case, 2 trades, 400 pips incorrect, I'm only losing $100, and I'm not losing sleep over it because I've properly calculated my risks. Everybody's sitting here who's over leveraging their account, and they're saying, "Oh yeah, $1,000 account, I can do a 1.00 trade." No, you're not doing it right, and this is why everybody cries and they blow their account, and you're just doing the 90%. So congratulations, you played yourself. All right, but this is how the big boys play. You need to calculate your risk. It's very, very, very important. So what's happening now? What am I looking out for today? Same thing as with yesterday. Nothing's really changed because we got that short that I was talking about as far as the this happening, like I was mentioning. So pay attention to see if this crawls up. I'm seeing if it breaks this top. Hopefully it doesn't. So if it comes up and crawls, let me delete this. I'm looking for this to keep giving us a little bit movement down. I hope I get that short to the downside. But even if it does, like I was saying, I mean, you got to determine if it does that, I mean, then what? All right, so it would be an impulse. This might be an A, B, C. Let me go like this. This might end up being a flag, and that would be the move to the upside. And that would make this even more complicated. And assuming it is complicated, I'm not too concerned because we're still looking for this to end up being some sort of correction that doesn't break this top right here, for that move downside. So you can see how this gets complicated, see how this is a very sharp move down, and we're getting all this mess. I mean, we're just playing private detective. I have absolutely no idea what's going to happen here. And everybody who's sitting here and looking at this saying, "Oh, I gotta buy and sell based on these little arrows that this dude is drawing on a screen," I think you're wrong. This isn't signals, this is just simply analysis, and this is just, like I said, playing private detective and having fun with determining what kind of movements are happening here. And I find that fun. I think it's a good mental brain exercise, but ultimately I don't care. It doesn't bother me because I'm looking for this move. So assuming that you have a large account, assuming you're properly calculating your risk, say if I got down here and I'm holding a really terrible trade, that's fine. if I properly calculated my risk and I'm looking for the proper risk to reward ratio, and we're assuming that this is based off the much larger pattern that I'm anticipating, why do you care about what happens up here? This is all fun and games. I'm looking for these much larger trades because this is investing. This is not gambling, and this is not playing with your 30 pips a day can make the job away mentality, because that's what some marketer spoon-fed to you, and I think that's bullshit, okay? So, calculate your risk, look at the much bigger patterns, and stop caring about all the little foo-foo stuff up here and all that, okay? Alright, let's go back to Telegram real quick, because someone had a question about UsdZar this morning, and I kind of want to address that. We're talking about this. Sandal, again, I appreciate it. He was looking at the 1 hour chart for UsdZar, so let's go at that. Go at that. He was talking about that this might be a double bottom, and let me show you what I see, because I don't see a double bottom. Because we look, here's another thing too. Everybody who's on mobile, look at how much data you're looking at, and this is kind of deceptive. Like if I were to go take this, let's copy this, and I'm gonna go to Paint real quick. Alright, pop this in. Let's go like this. Okay. Do you see this in comparison to everything on TradingView? What are we looking at here on your mobile phone? You're only looking at this tiny amount of data. So you're missing. Here, let me make this small so you kind of understand here. Zoom out, zoom out, zoom out. Let's go like that. You see that? See how it's covering that? You're missing all of this data. So you're basing your double bottom off of what? Because if you're doing double bottoms, what about this double bottom? 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 What about these double bottoms? And everybody's talking about double bottom, or head and shoulders, and all these other foo-foo patterns. You're missing the bigger picture. You're missing all of this data and this information. So, with that in mind, what are we actually looking at? I don't really trade the UsdZar, so it's kind of on a whim. So I kind of put these trend lines here this morning. But I was kind of looking at it. If we take a look at it this way, say this, assuming that this is the impulse to the downside, all of this, we got to take that into play. If we have our major trend line like I have here coming all the way down, this didn't break yet, we're not out of it, but if we take this trend line from this impulse and this potential impulse here, I have this trend line going down, you see that? It's breaking out now. So we're kind of breaking out of that, so we got to pay attention to see what that's doing. So it might be like a temporary uptrend right now, and that supposed double bottom may be valid for right now. But like I said, what about this double bottom, or that one, or that one, or that one, or that one, or all this? So you got to understand that this is just simply potentially a correction. It may come up to this trend line and then break down. And then where's your double bottom? Okay, so you gotta look at all the information. Okay, so what are we looking at? If we're looking at this potentially being an impulse, this is a correction, and this another impulse, is that a three-way structure? Yeah, maybe. But then we corrected, and we made another move down. All right, so what's happening now? If you're familiar with Elliot, he looks at corrections of similar looks. So we're looking for two different corrections that are the same size to let us know that this piece is done. So if we get a correction that's the same size as this one, here, for example, if this is building, these would be similarly sized corrections, and that would be great. And if we get another breakdown, I would know that this is all one piece. So we'd have this piece, and we'd have this piece. So we'd have an impulse, we'd have a correction, we'd have an impulse. This is a lot of aqua on one screen. You see? So we'd have one piece, we'd have another piece, and this might be another piece. So this might be the 3, this might be the 4, this might be the 5. I don't focus on the labeling, it doesn't matter. You're just looking at separate pieces and different breaks, and you just gotta, if you're focusing on labeling and 1, 2, 3, ABC and all that, you're just gonna get burned. You just need to have a much deeper understanding and look at all the variables and all the factors. Okay, so I'm looking for if this makes that correction, this makes that break. What I'm really caring about is if it breaks this trend line. See this major trend line that hasn't broken yet? If we get a breakout here and if we get a flag, then I'd be looking for the upside, and that'd be great. That's what's kind of happening on the smaller time frames here, which you thought was a double bottom. So let's look at that. Let's zoom in, okay? So if I were to zoom in all the way down here, all this baby information that you thought was here, basically here's what your screen was looking like. Right, that's what you saw on the mobile. Okay, all right. So taking into account this trend line that was coming down from all the way up here, see this trend line? It did break, so that's cool. So what's going on right now? This kind of looks like this might be an impulse, might be an A. So assuming this is an A, this comes up, makes some kind of flat, and this is a flag. That'd be great. And this would be a valid setup, meaning this is the impulse, this first part. Everything in between here is the correction, and then what you would be wanting to look for is this next impulse to this trend line. You got to figure out then at that point, I mean, what happens when it touches these trend lines. We got to figure out the price action from there. So if this makes that move up, like I said, we get another move down, and say if this breaks, cool. But that all might end up just be simply a correction. Because look, I mean, as soon as it breaks this, everybody like, yippee, it's just gonna go straight to the moon. No, that's not the case. Trendline breaks doesn't necessarily mean that, because I mean, if this comes up and this just makes a 1, 2, 3 wave structure within the correction, and this comes straight down, then what? What are you going to tell me? Oh yeah, the market's crazy this morning. The market's shaky. You know, everything's volatile, or the news, or you're just going to come up with some stupid excuse. But I'm telling you, look at this correction right here. We got an impulse. We got a correction. This came straight down. You telling me that can't happen right here? Really? You're playing yourself. Alright, so this doesn't look like a bottom to me. This doesn't look like this is finished. This is a trend continuation pattern in the making. But you got to play Sherlock Holmes and figure out what kind of pattern it's going to make. We don't know. We have absolutely no idea. Alright, because this one came up and made a 1, 2, 3, right? And then came down. So is this making a 1, 2, 3? And then come down? Cool. We'll see. But if you look at bottoms, let's see if we can find a good example on this one as far as price action goes. You got to look historically. What happens whenever it comes and reaches a bottom? Assuming that this is I don't think it's a bottom. Look, the second it comes down, ignore the pin. Everybody who trades pin, you're silly. We got a sharp move to the upside. We got another sharp move up, and then we create our impulse, correction, impulse. You know what I'm talking about. And then we got another pattern going on, but that's another story. I'm looking for that strong price action. I don't see that strong price. Look, every time it hits the bottom, impulse, impulse. You know, this is not looking like a bottom. This is looking like another correction for the downside. So just keep that in mind. Yeah, if you want to take these buys, let's see where you're into. You got to buy at the. Okay, I like your stop loss. You should actually bring it down to the bottom here. But that's another story. You want to kind of keep some pips. That's cool. Let's see where you're at. You're at like 11.9. Let's go here, for example. Where are we at? 11, a little more, 11.9. Let's just say that's 11.9. And my stop loss will always be below the low, because that lets you know the second it touches that your setup's invalid. But I'll elaborate on that later. I'm not too worried about a particular take profit. You got to be active here. You can't just place numbers, because how many times does it come up, not even touched it, and then come straight down on you? So don't focus on that. But you want to look somewhere to hopefully break this top. So I'd aim for a target right above this high. So if this ends up being a 1, 2, 3, comes up and breaks this high, you come up and take a profit, and then this ends up being that correction that we're talking about. It doesn't take you out. So you got to be active. But there's different variations of these patterns, because if this comes up being a 1, 2, 3, because look, I'm not going to say look at this pin and trade based off that, but this all realistically could just drop from here. And what does that make? That makes an A, B, C, and this just ends up being a running flat. And I'm familiar with these different patterns. There's all sorts of different flat variations. They're not all just quote unquote flat. Like I couldn't even draw a flat. This isn't flat. See that? This is a different variation of the flat. We have expanding, we have contracting, and we have running. Let's go like this. So this one will be the running. So that, in all reality, could happen right here. I mean, it all just depends. So, I mean, if we were to go back to your picture here, the second this comes up and comes past market, I would take this stop loss and put it right above your buy. Lock your profit in, because we don't know what pattern it's going to end up making. But after your profit's locked in, it doesn't really matter now, does it? Because you're in profit, okay? So keep out for that. I'm going to end the video here. Hopefully this benefited you, and hope you have a wonderful trading day, guys. Stay tuned. It's going to be an interesting day tomorrow.